Morning traders, Paul here with GammaEdge. Today is Thursday, the 8th of September. Let's get started. The fine print. Pause your players here, read to the end. If you agree, hit that play button. Summary for today. Market models are showing a new short-term trend. Note that the intermediate trend is still down, as is the long-term trend. So make sure you understand that. Nevertheless, keep your longer-term downside positions intact now. Paper trades, of course, but you may want to be looking at initiating some new short-term uptrends. Again, paper trading across the board. The wing charts are showing a significant drop in negative gamma. What this means is that shorter-term puts are coming out, and we're seeing a notable increase in short-term calls going in, so we want to pay attention to that. That's supporting the short-term up new signal. The fish pond stuff that one of our traders, JB, is doing is just stellar, and we're showing that the gamma ratios have advanced slightly off the lows. There was a signal that we took yesterday, and I'll talk a little bit about that. The 4,000, 4,005 strike level, we were at an area yesterday that made it very, very difficult to absorb and get above. Looks like we were correct to a certain extent on that. We pushed up to whatever it was, about 39.85 or so. Now, with yesterday's action, it's reduced debt from 90 billion net notional down to 32 billion. This is well within absorption levels, and I want everybody to be aware we could easily push above that, especially starting where we are from the 39.80 levels. So I would not be at all surprised if we took out the 4,000, 4,005 level intraday and possibly even close above it. If we do close above it, we think the 40-50 seems to be a realistic zone for movement upwards. We think, though, it'll be hard to make progress. The delta notional above us is still negative, although a lot of it looks like it could flip positive. And if we continue to see calls being added, the most assuredly will happen today and tomorrow. To the downside, 39.50 is really the line in the sand. We've got negative GEX sitting down at 3,900. Some large levels, the 3,900 is dominant, so we want to pay attention to that. We could test that lower level quite easily, actually, from here. There isn't a lot stopping us to move down in that range. If we lose the 3,900, then I think the 38.50, 38.75 area probably will be the likely stalling area, and that's just because, again, when we take a look at how deep in the puts we would be, we would expect some monetization. So in general, make sure you understand what we just talked about here, and our shortest term view is still up, but the intermediate and long-term trend are still intact, and they are down. Taking a look at the cumulative tick market model, I'm using the USC, the US composite here. This is what I'm talking about in terms of that short term. So the first initial signal about getting in was right here around 11 o'clock Eastern time. Another confirmation right around 1:30 according to the USC, excuse me. And then end of day, you can see that we're setting up pretty cleanly. I want to draw everyone's eye up here. This is the filtered cumulative tick. And basically, this indicates a presence of large players putting continuous orders into the exchanges, and the exchanges having basically persistence of over 1,000 ticks per minute net to the upside. And when we see that type of growth here, this is telling us that the market can't clear as fast as when it's flat, for instance, like back in this area or whatever the case may be, early in the day. Very little signals going on, but when you see this almost linear up type of behavior, this is telling us that the large players are playing, and you want to pay attention to that. All of that being said, we are still in an intermediate downtrend with the CT below the ribbon, and then the ribbon has got negative slopes across the line. And so again, longer term, intermediate term bearish, shorter term bullish. Every new bull signal starts with this signature. You have to recognize this and be able to participate. We have no idea what's going to happen today, so make sure you're thinking about the short term, what you're going to do in context of long positions and short positions. The SPX, as I said, wing charts are all showing constructive, short-term gamma coming out, long-term gamma going in. We'll note a significant change in the put GEX and call GEX for the SPX A, but overall no changes over here. This is due most likely just to the noise that's going on on the call side. But when we see the puts come up from 38 to 39, especially in the AM settled, could be an anticipation of a drop. And so as we're going to watch this extend over to here, if we do see the puts continuing to advance upward in terms of that put GEX or put gamma exposure negative GEX, we're gonna pay attention there and get prepared for possibly another leg down. But we're not seeing it right now. Green light across the board from yesterday's action. This is what I was talking about. JB's work creates a heat map here, shows us the overall ranges. We have the liquidity stocks here, and we also have the primary ETFs on SPYQs and IWM. Highlight the IWM because we took a trade yesterday based upon some work that we've done with our partner EdgeRater. EdgeRater is showing that when you get in at this 0.2 level, 0.3 level, which is indicative here, 0.2, 0.3, it has a very, very good return rate. We don't have to hold until it's at parity, which is what this is. You can easily get out, especially with options. This is done with equity, and if you're doing this with options, you obviously get the convexity of gamma and are able to make your gains much, much faster in a much shorter holding period. So just be aware, we're in this trade right now based in part on what's going on here. We did advance up, could easily pull back, and if we do pull back to the 180 level, which is was our entry here, we will get out of the trade. There is a channel dedicated or a thread dedicated to this within the Discord, and I would urge everyone to go down and take a look at it. It's under my trade sequence, Paul's trades. The SPX changes. Note that we are seeing downside puts being added in some relative magnitude. Again, I call your eye to the major divisions, 50,000 going in here on the short-term basis, whereas on the call side, we're not seeing that. You can see what the distribution is here, tight bunching on the calls here. You can see a lot of puts being closed, calls being closed, and where they're starting to bunch. So your eye is a very good filter. It shows you where the kind of the mass or the centroid of these different groupings are. Just pay attention to what's happening here. And again, if you click on these charts within the Discord, they're all interactive, and you can hover your cursor over and really drill in pretty deeply here. The complex zeros are still showing that divergence that we've been talking about in the Discord for many, many days now. We've got the SPX A, which we consider the institutional money. The deltas are still pointing up. Gamma rolled over just a little bit here, this red line here, but in general, the other deltas of the other indices, the ETFs specifically, are rolling down, but the SPXA, which is the AM settled, continues to advance, showing us that the institutions are actually buying the dip. They're not selling, they're not positioning for a long-term drop. That's our interpretation here. It's contrary to, I think, everything else you're going to read in FinTwit. Could be wrong. We'll be the first to admit that this is a relatively new signal that we've been watching since the beginning of May. We've not seen this type of behavior, and so our interpretation is young. But I just want everyone to be aware of, we are tracking this, we are watching this divergence, and it's going to get resolved one way or the other. We're either going to see this break down and resume much like what the other ones do, or we're going to start seeing a turn up of the SPY, the Qs, and IWM in terms of their TGZ, the gamma zero, as well as the yellow line, the delta zero. Taking a look at the key levels for today, we've got a lot of development again on the PM settled. These are the dailies and quarterlies. I've mapped them over here to the combo, really paying attention to this 4,000 level. This has really dropped, like I said earlier. The 3,900 level remains intact, but even it is smaller than what it was yesterday. So, and you can see now we're starting to see some positive behaviors also below us. So as we start seeing more and more green here, that supports us going up in terms of the number of shares or contracts that have to be hedged. Zero DTE, pretty busy chart here, but first of all, I want everyone to realize we have a positive expiry today. We haven't had a positive expiry for a while, so this is kind of interesting to watch. The key takeaway here is that we're in this transition area, right, kind of between the 3980, 3985, and then down here is 3950, 3955. We closed right in this transition area. Overnight exposure to the dealers is minimal in this area. Note the push upward in the net delta notional as we go up. We think that's important. We also see that contributions of the zero DTE to today's action above this 4050 are probably not going to be there. So just be aware of that. Downside, 3865, 3870 is the lower bound of the expected range or expected move. Not anticipating that, but nevertheless, just pay attention to that. The combo is pretty interesting. Again, we advanced up to 4,400, back from 43, and you'll see why here in a moment. They're very, very close in overall magnitude. The key takeaway that I want everyone to be aware of is this right here. This was a very large number yesterday, upwards of negative 90 billion. You can see now it's upward of minus 32 billion, and so we could easily push from this starting position. If you just do a summation as you walk up here, you can see that well under thresholds that we've absorbed in the past. Note on the way up, as we get up towards this 4050 area, which was the same 4050 area of the zero DTE, we start getting into an area where it's going to be really, really hard to absorb. So if we can push up into this area, then I think 4100 starts getting opened up, but there's still a lot of notional above this. And also note it's red. It's negative, and it's typically hard to advance in a sea of red. It's usually the drunken sailor behavior where, 3 steps forward, 2 steps back type thing. So just be aware of that. Note here, 4,000 still contains COI, POI, not liquid. They are moving. Certainly we are seeing calls go in, et cetera, and it's reducing this gamma exposure at 4,000, a fairly significant amount. To the downside, 3,900 here, 3,950. 3,950 is also coincident where negative trans starts, but you can see a lot of positive being developed here, and the floor as it moves up will be supportive of us to advance. So just keep all of this in mind as we go forward. Last slide here. Here's that 4,300, 4,400 I was talking about. We've been watching 42, 43, 44, 43, 44, 45 bounce around in overall levels the last couple of days, and you can see why we're ping-ponging back and forth. They're almost the same level. So as we move up, whoever has the shortest term call structure as well as the largest open interest, they play together, will take the lead. 4150 really is the first major line to cross. You can see we've got a lot of grouping of gamma, positive gamma here. We've got some negative that's developing up here. That 4010, which is the first strike, of course, above the JPM 4005 range, really starts defining a positive gamma environment. I don't want to call it a flip. It's not a flip. It's a transition area, and just be aware of that. We don't really get into a positive gamma for some time because you can see all these zeros. We still need calls to go in. We need all of these little red lines here to vaporize, and we're still maybe a day or two away from that if we see calls go in. We closed right here at 39.79. You can see us at 39 minus GEX here at minus 3,900, 3,800 here. One thing before we close here, Note how the line at 4,000, the 4,000 strike is vaporizing. This has been extremely dominant, and now it's not. And so this is due, since this is a net value, we are seeing calls go in at 4,000 as people anticipate a move forward and move upward. So that's it for today. If you like today's comment, come and join us at GammaEdge.us. When you click on this, or if you type that in, you'll go to a pricing page. Fill out the blanks. Come and join us in our Discord. We got a great group of traders, all experience levels from beginning and end of day to people who day trade to folks who do everything. It's pretty amazing. Really grateful for the community. On Twitter, GammaEdges with an S. Ask that you follow us, and then here, of course, on YouTube. If you like today's content, let me know by smashing that like button. And of course, subscribe, because Taylor posts something every day, which is very valuable, and Michael posts as well as I, and you want to get notified of those. So with that, make it a great Thursday. Good luck to us all, and hope to see you in the Discord. Thanks, everyone.